In this example, we're going to be looking at the cash payments journal. The cash payments journal is another special journal that is used to record only cash payment transactions. So we use this journal anytime we have an outflow of cash, which is recognized by crediting the cash account. So we're going to look at the following scenarios and show how we put them into the cash payments journal. So the cash payments journal, you're going to have a place for the account that you're going to debit, the accounts payable amount that you're going to debit, and possibly a general debit or a purchases debit or purchases discount or a cash credit. So lots of stuff going on there, and this relates back to chapter 11. So in the first one, it says that we issued check number 318, so that goes right here, to Clausen Corporation, that's our vendor right here, for merchandise that was purchased on August 28th for $5,000, which had terms of 2, 10, and 30, and payment is made within the discount period. So this is where we have to take into account any discounts that occurred. But keep in mind the original amount was for $5,000, so we're going to debit or decrease our accounts payable for the $5,000 because we're paying them, so we no longer owe them, so we want to decrease that account. But then we have to find our 2% discount. So our 2% discount for our 2, 10, and 30 is going to give us a $100 purchases discount. So we'll credit the purchases discount for $100, which means we only have to pay cash of $4,900. Because we have a 2% discount, we're only paying out cash, we're only paying actually 98% of the original $5,000 purchase price. Then on the 12th, we issue check 319 to McGonigal Company for merchandise that was purchased in the amount of $8,400, which had terms of 1, 10, and 30. But you'll notice we're not debiting our accounts payable for $8,000 because if we read on, it says we also had a credit memo. Some items had been returned in the amount of $400. So $8,400 minus $400, that transaction has already been put into the journal. So we only actually owe $8,000 now because we already returned the $400, so we don't have to pay that $400. But then, on top of that, we have to take into account that it was made within the discount period. So 800 times our 1% gives us an $80 discount. So we actually only have to pay $7,920, and that is shown with a credit to the cash account. On the 19th, we issue check number 320 to Elite System for merchandise that was purchased August 19th. Nothing special here. It was just terms in 30, which means net purchase price is due within 30 days. So since we're paying it, and this is our payments journal, we decrease cash, and then we also decrease accounts payable, showing that we don't owe them for that $4,600 anymore. And the last one on the 27th, we issued check number 321 to Glen Falls. Merchandise was purchased in the amount of $7,000. Terms 2, 10, and 30. Payment is made within the discount period. So we're still going to decrease our accounts payable by the $7,000 that we originally purchased, but since we're paying early within 10 days, we get to calculate the 2% discount of $140, which means we don't have to pay that amount, but we need to credit it to the purchases discount account, and then we only have to pay $6,860 of the original $7,000, and that is shown by decreasing or crediting the cash account.